been one of the most interesting assets out there. We saw first the EU oil embargo come in targeting seaborne purchases, exempting pipeline to appease countries like Hungary. This will be phased in over a 6-month period, but it takes around 2/3 of Russian supply and imports offline to Europe. We also got Shanghai and Beijing reopening back up. That's going to help the demand side of things. The summer travel season is fast approaching. But in terms of last night, we saw some news come out about Russia being exempt from their OPEC plus production agreements, and that actually saw crude sell off. Now, in my mind, that was a bit of an overreaction, a weird response, given that Saudi and UAE would likely net that off in terms of total production levels. Obviously, higher crude, higher oil prices fed into higher inflation expectations. This has led to high yields, and we saw equity markets sell off a tiny bit yesterday. We've got high yields. Yesterday, the dollar bounced off its 50-day simple moving average, and I think this was down to high yields, a beat on PMI, a beat on consumer confidence, and slightly lower equity markets. Eurozone inflation hit a new record high at 8.1%, and many now are wondering, could we see a shock rate hike at next week's meeting? The market's certainly not priced for this, and we certainly cannot leave 50 basis points now off the table for the July meeting. We've got US dollar JPY loving the high US yields. It's up almost 2 big figs in the past 2 days. Gold sold off around 1% yesterday on the back of those high real yields and a stronger dollar. In terms of what to expect for the day ahead, we've got heavy hitters from the ECB, Lagarde and Lane giving a speech, ADP, employment data and Jolts, and then we've got on Thursday the OPEC meeting, which should be quite interesting, and Swiss inflation, Swissy, let's see what happens there, and non-farm payrolls on Friday. Trade the opportunity with Pepperstone.